winner, 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 100% winners. How's that for a retail quant algorithm? 100% winners, retail quant algorithm. Pretty good? Yeah, pretty good. I mean, it's a good start to understanding the marketplace, isn't it? It's a great start to thinking about the market in the way that a quant should be thinking about the market, in terms of getting relative value lining up with the idea of the probability distributions as well. So you get this sense of simple quality in your trading, a sense of knowing what cheap or expensive is, or what supply or demand is, a sense of adverse selection, something we've covered a lot about, a sense of momentum and mean reversion, and these types of concepts that we can simply recognize as far as tradable opportunities. And when you get them lining up, well, it's a pretty good outcome to any trade. And you can see that we're nowhere near getting a trade anytime soon in this. As you can see here, there's no trade anywhere soon. So obviously a little red area here, it's simply just a distribution. So you use that red up volume arriving inside the pin zone as a V-pin distribution trade for your long positions, and another winning trade banked on the natural gas. You can see from our S&P model that we talked about a few minutes ago, still no sell trade. You can see the value's dropped off a little bit. You can see it's actually dropped down to the zero minus, so it's actually gone into more bullish territory, interestingly enough. So when this drops down, the probability is building that this is likely to be bullish through this phase here, which is exactly what's happened. And and it's punched a hole up to 67 handle now. So that was a very nice buy trade off of 66.72. 67 evens at the top edge is a pretty good outcome, isn't it? So again, you can see the model was correct on these examples here that we've seen so far today. The model's been absolutely correct. There's only been 3 trades basically today, so that it's only 3 trades because that's what you've defined it as, is 3 trades. I mean, it can be as many trades as you like, but the model tells me that that's the only trades that we've had at this point. So it's looking good. It's looking healthy. 67 evens gone bid at the moment. And we'll see if it's got any more upside on this. But we'll certainly be covering these aspects in the quick starts. This is what the quick starts are all about. Maybe quick starts are, probably a mistaken title for them. It's quant think. The idea of thinking about your market like a quant, like an analyst, like somebody that wants to build a very robust system, and understanding the rules for building robust systems versus things that basically collapse at the first sign of any kind of pressure, but also knowing the rules for taking the system down is equally important. Now, one of the things you've probably already noticed from an order flow point of view from the NASDAQ is, look at how many adverse selection buy events we've had since 3:30 versus how many sell side selection. Look at them. Look. Buys. Look at all these adverse selection events. They're all long, aren't they? Every single one of them's a long adverse selection event.